When it comes to crypto, investing in ICOs is one of the most profitable things you can do, right? But also with big returns come big drawbacks. And if you don't know exactly what you are doing, you might be a victim of an exit scam and also lose all of your funds while investing on ICOs. And believe it or not, you will need a big amount of capital in order to do this. But if you want to be able to go through all of the projects and pick the very best with high chances of success, then you should keep watching. Hi, I'm Hugo from awaketech.com, and in this video I'm going to show you how to do your own research so that you can find and invest in new crypto projects such as ICOs, IDOs and IEOs. You should keep watching if you would like to know which are the most profitable ones while also keeping your risk low. Before jumping into all the details and metrics that you can analyze to evaluate new projects or ICOs, you'll first need to know what ICOs are exactly. But before that, I'm just going to tell you a little bit of the backstory, how I came across this. So I was looking online and I saw some guy, which is a media wire, get into ICO investing, and I saw that it has a lot of potential. So I decided to make a search myself so that I would know how ICOs work and how to pick them if I wanted to potentially invest in them in the future. Launching an ICO is a way for companies to raise money so that they can create a new coin, app or service. Investors buy into an offering and receive rewards in form of a new token. Usually they will need to hold a specific amount and or also stake it to be eligible for the token public sale. These offerings can yield massive returns for investors, doubling their investment, but also turn out to be frauds or just failed projects. And that's why knowing how to do your own research is a must for investing in this type of offerings or other projects popping up. ICO stands for Initial Coin Offering, and if you remove the C, you get IO, which is Initial Offering, and then depending on where said offering is hosted and the type of distribution, you'll have multiple types. We are going to cover ICOs, IDOs and IEOs, which are the most common. So as I said, ICOs are initial coin offerings. In the ICO, the project itself is responsible for managing transactions and operations on an internal platform. Tokens are transferred from the project to the investors. These are not initially listed on high reputation exchanges, which makes them easier targets for market manipulation. If it's an ERC20 token, it might be available on a DEX such as Uniswap, good but not ideal as it is out of reach from average traders using CeFi platforms, which are centralized finance platforms such as your most common or well-known exchanges, which could be Binance, Coinbase and others. Then we have IDOs, which are initial DEX offerings. In an IDO, the project is hosted in a decentralized exchange. As I mentioned before, it could be one such as Uniswap or even PancakeSwap or SushiSwap, and there are a lot more of those. Some DEXs have very few requirements, and rug pulls or scams might be actually more common, such as projects running with the capital and leaving you with useless ERC20 tokens. ERC20 tokens are just tokens that work in top of the Ethereum blockchain, which also means that they can have expensive gas fees, which are transaction fees. These are fees that you need to pay if you want to buy or transfer funds from your wallet to other platform. But of course, it depends on the type of token. And then we have IEOs, which are initial exchange offerings. So in an IEO, the project is hosted in-house on a centralized exchange such as Binance, Coinbase, KuCoin and others. So there's immediate availability, which also gives room to more inexperienced and irrational investors who might actually push the price up, and you will notice the increases on new coin listings. There are more requirements for the project projects to be listed or approved by the exchanges, and you will also notice that there are quick sellouts and high volatility, especially in the first hours. And of course, some examples or cases where you can get those tokens is through Binance Launchpad or Launchpool. But of course, other trading platforms also have things such as this, where you can get your hands on those specific tokens, and some of them will again require you to stake their own exchange coin in order for you to get access to the token, or in other cases you can just buy it directly. Now, a note regarding exchange listings: not being listed on a reputable exchange is not necessarily bad, because investors will benefit from entering sooner and making more profits. But more often than not, list announcements on exchanges such as Coinbase and Binance are strong sell signals, and a good opportunity to buy also appears after the dip once the coin is listed on said platforms.
Isold. Pump it.
So the two most common types of token distribution are Fairlaunch and Premine. In a Fairlaunch, everyone has equal access to token distribution, so there's no specific allocations if they contribute with mining and liquidity, while in Premine there's a quantity of tokens that's mined and attributed to the team or certain groups of people, such as founders, developers, early investors, and so on. And the public in general cannot get access or get their hands on that amount. And this happens before the public launch. So the fair launch would be preferable, but it doesn't precisely determine whether a project is a viable investment or not, and are generally harder to find or more rare. It only means that it might be riskier due to the higher degree of centralization, as there is a larger number of tokens attributed to a small group. Here are some ways that you can use to find upcoming ICOs or ICO listings. So if you are already using a DEX or a decentralized exchange to get your hands on new IDOs, it's pretty easy to look at upcoming IDOs from the platform itself. If you are not following the projects that closely or notified via email, you can find a lot of upcoming projects on ICO listing sites, and two sites I like to take a look at are ICODrops and also CoinMarketCap, but sometimes the exchanges also publish articles about new projects being launched on them, and of course the section where they publish that might be slightly different, and they have usually all of details that you need to know in order to participate in those projects. You can also find them on that specific launchpad or launchpool if that's how they distribute them on their platform. Some new projects, especially Fairlaunch, can be mentioned on Twitter, Reddit, and some crypto forums such as Bitcoin Talk. On the ICODrops homepage you will see 3 columns, but you will find yourself mostly looking at upcoming ICOs and active ICOs. After clicking on a project, you can see some stats and information about it. You can start with the summary, and you should take a first read at it. If it's too vague or looks like a copy of other cryptocurrencies such as Ethereum or Bitcoin, you should probably not buy it. Then there's also the role and category, and if said category is blowing up right now, chances are that the project might give you an higher ROI. The best ones would have a unique and new use case and their own blockchain, but most of them are improving current blockchains or adding some extra functionality to it. Then you can also take a look at token sales details, where you can see if the coins have any geo restrictions. Some of them do, meaning that the citizens from certain countries might not be able to participate in the public sale. You will also want to check out the token price. If a token is cheaper, it might mean that there's potential to buy more of it and therefore making more profits, but of course there are always more prerequisites and also other factors that will influence how much of the token you can buy. Token type will tell you what blockchain it is running on. Most will be ERC20 tokens, as most projects or apps are built on top of the Ethereum blockchain, which means also that there might be some gas fees that are currently not that cheap, and you will need to pay them to trade transact on the blockchain, deposit funds, use smart contracts and all of that stuff. There are also some BEP20 which work with the Binance chain, and those are usually cheaper when it comes to transaction fees. Best case would be if a project had its own native blockchain, but as I told you, most are ERC20, which doesn't make them bad projects. There are a lot of ERC20 token ICOs which end up being successful and making a very good return on your investment. Then at the bottom you can also take a look at some screenshots and pictures regarding allocation, investors, partnerships and roadmaps, which are of course taken from the source material. It's always a plus if those images are already there and you don't need to dig around deeper in order to find them, as you can easily look at the data and also add some credibility points to the project, since they are already making the information publicly available. A lot of new projects will have partnerships and investors, and to get it out of the way, you might want to take a note regarding how many there are, but that number shouldn't be decisive. Focus instead on the nature of those partnerships and whether they provide specific information about it or not. The availability of such information will be a plus on your checklist. You might need to look around on their docs, blog, Medium page or exchanges to find it, and sometimes new projects may be featured in reputable news outlets because they pay them to do so, or because the project is really interesting and the specific website decided to write an article about it. And then the way that you can check that out is by looking at the articles and seeing if they have a sponsored stamp, a paragraph in the end of the article saying that it is sponsored or paid promotion. For example, on press releases on Cointelegraph, if an article has a sponsored stamp on it, then it is a paid article. If there is a venture capital firm involved, then you should verify if the claim of the investment is real by hopping into the blog, Medium and also Crunchbase. If a product is listed on Crunchbase, you can check the seed money raised and the sources for the amounts as well. When looking at token allocation for the initial token distribution, you'll want to see how much of it is being sold during the ICO. If most of the token is being sold during the ICO, then that's great news for you. Usually you will see allocations of 15 to 50% of the initial token supply. Consider yourself warned if less than 50% is being publicly sold on a public sale, on the graphics or on the screenshots. That is a simple way to take a look at it. Lockups or vesting schedules are also very important, and vesting is the right to a present or future payment. You can see how much will be allocated to founders, investors and non-ICO purposes, and it will be immediately available or has a fixed period release after that period. Terms very important. You should check out our token supply, token inflation, token burning, and usually you can find them using the search bar on the project's docs, and if they don't have that, just use Ctrl F and then type in the terms that you are looking for so that you don't have to read the whole thing. But of course you can do so if you want to have a better understanding of the entire project. You can start by visiting the official website, followed by blog and Medium for more token details and the white paper for more info about token distribution. Here are some important terms you should look at on the white paper, or phrases that they might use to mention specific topics regarding the project. You have allocation, vesting, lock, mining rewards, inflation, supply, burn and mint. Now the perfect scenario for tokenomics could have one of the following: a gradual unlock for non-ICO tokens which last more than 2 years, a maximum supply or a low annual inflation, and you also want the project to have robust economic incentives for participants for a particular use case, staking and or mining. If there are no lockups, vesting schedules or any anti-inflationary system in place, consider putting your funds somewhere else. As last resource, you can always try to reach out to the team via GitHub, Telegram or others that they might provide you with, and see if they can provide said information. But even if they give you that info, consider that fact that there is not a whole lot of information available publicly at an extra risk. To gauge the demand for a new ICO, we can use some metrics, but it's sort of a quantity and quality mix. We always want high demand because it makes the prices go up. Look at demand raised by the ICO since it has been active. If the moonshot ICO has not been launched yet, open all social media channels, Twitter, Telegram, Medium and whatever they have available, and see how many followers the project has, but also if the posts have real engagements and replies, an active team, rather than some accounts which do have posts but don't have a lot of engagement from real users at all. When a project has reputable or popular founders and crypto leader partnerships, it adds up to its reputation and overall success going forward, and you can call it star power. Regular folks who don't research tend to hype into projects due to its popularity and authority online, but you already have more chances than the average Joe if you implement research methodology. Sometimes last minute investors also opt in because they see their hashtag being blasted on social and thinking that they are going to be rich or even go and buy a Lambo. Or there's also other users who simply want to take advantage of people who decide to buy into a project emotionally just because they saw something on multiple social channels. I have decided to give trading a try in the last few weeks, and this is one of the few patterns that I have in my arsenal. Probably has another name, but the source where I learned it from usually refers to it as an ICO or parabolic pattern, because you can see pretty big moves from 100 up to even 600% gains. What really matters here is that you can recognize it when it's forming and take advantage of it when the opportunity comes. And there are two main things that you should consider, which is the leading trend and then the exits. So for the leading trend, you are looking for a recent ICO with 1 to 6 months of price action data available. Coins may have been trading for 6 months on a specific exchange, so you might want to take a look at different exchanges to make sure that coin doesn't have more data on one of them, because of course the first exchange where it will be listed will have more price action than the other ones where that same coin is listed later on, and you want to take a look at those charts and see if you can spot some price action and previous all-time highs. If there are no previous all-time highs, then you have blue skies ahead, and this is an expression used that indicates that coin doesn't have a ceiling or a significant all-time high for reference. And of course you would spot this usually on daily charts, 4-hour charts, and not on 15-minute charts. 15-minute charts are instead used to be more precise with your entries. As for the exits, you can take profit around whole numbers and scale up of your position on the way up with partial sells of, for example, 25%. And then for the stop loss, you would want to take a look at the 13 and 20 EMAs and look for crossovers as a reference due to the fact that there's not a whole lot of data. This is an example of what a pattern like this would look like. I just jump into TradingView. I am on the daily chart. So here, as you can see, there's no previous all-time high, and this means blue skies. Then here you can see some price action right here, and as you can see there's a triangle forming up, and then there is a breakout right here on this green arrow, and where you would want to buy is right here on the bottom line, which would be a support area. And then of course it ripped, and then you would want to sell on whole numbers or around whole numbers, and luckily TradingView shows these lines right here where you can set up some take profits. So here you have the first one, which would be around 12, then the second one, which is around 16, then the third one, which is around 20, and then you have one close to 24. And of course these are very easy numbers to set up as take profits, and then as you can see the take profits are represented by the red arrows pointing down. Just imagine that you bought on this resistance right here. If you were to sell it right here, you would have made 244%, and if you would have sold it right here, which is the all-time high, you would have made 358.70%. A lot of gains, a big percentage. However, as I said, ICOs do represent more risks. And then if you were to trail it all the way up and you didn't sell everything, let's say, you would have also lost. And when it hits this point right here where the EMAs cross, you better sell it. And as you can see in this case, there's no clear point where there is a stop loss except right here when it's already gone very far and it's already down. But of course, in this case, you could set up your stop loss right near this crossover, and you could set your stop loss here or just below the last red candle. If you like the video, click on the subscribe button and tickle the bell icon to get notified of new video releases. You can find the Google Sheet and some of the research tools on the links down in the description. Thanks for watching, and I'll hopefully see you on the next one. Bye bye.